Market alert. This is a nail biter. We're watching the NASDAQ. It's up just 3. Any gain will make it a record. And of course, today, the end of Q1. So imagine, it's a great thing to imagine, that you had $21 billion to invest in the stock market. Where would you put it in the second quarter? This guy has that. Mark Heppenstall is Penn Mutual Asset Management Chief Investment Officer. You ask yourself that question every day.
Well, yes, we are primarily invested in the fixed income markets, but we do focus on the equity markets as well and do allocate capital within the equity markets. So
it's been a hell of a quarter. Really
it has
good
been.
for
really,
just about
since election
everybody.
day, it's been pretty remarkable how strong the equity markets have been. And incredibly resilient was the one word I would use to sort of describe how the markets have been, even in the midst of the failure to repeal Obamacare and some negative headlines seemingly come across every day. But the markets are just 30 points off the high in terms of S&P points. So
that's a perfect word, resilient.
Yes.
Look, but for telecoms and energy, which were sort of the real laggards this quarter, where do you look to see gains in Q2? Because technology's done so incredibly well, and I always worry, oh, now you're buying at the top.
Well, I think it's going to be hard to fight the trend in technology. I wouldn't try to pick the top there, but we think financials are a better place to be. They've been strong since Election Day, and we think they're uniquely positioned to benefit from the Trump agenda, the Trump trifecta: taxes, regulation, infrastructure, and interest rates all serve to benefit bank stocks. And even if you just look at the regulatory side, some of the regulatory costs, and you minimize those for banks, we think that's going to be supportive of bank performance going forward.
Well, so I'm looking at the XLF. The annual high was 25, and it's at 23 right now. So it's brushing up against that. But Goldman Sachs has sort of been the real drag on the Dow. I know you don't talk individual stocks, but does that concern you if we don't get tax reform?
Well, we like bank stocks that aren't necessarily tied to the financial markets as much. You know, one of the repercussions of this trend towards passive versus active in equities is there's going to be less turnover in stocks, in the stock market generally. So we would tend to focus more on regional banks as opposed to money center banks in here. $21
billion in assets to work with. Good luck to you.
Well, thank you.
Thank you for sharing
this
information with us. Mark Heppenstall, Penn Mutual Asset Management Chief Investment Officer.